Hey guys, today we'll be talking about candlesticks. So, candlesticks are the most important thing for any trader to trade in any financial markets. So, candlesticks are the base and foundation of technical analysis. So, for any trader to do technical analysis, it is important for them to understand what candlesticks are. So, today in this video, we'll talk about a few bullish and bearish examples of candlestick chart patterns, and we'll even try to build a trade based on these candlestick chart patterns. We'll talk about the psychology behind these candlestick chart patterns, and I'll even show you guys a few examples of how the price reacts when these candlestick chart patterns are formed. So before we dive into it, I'd really appreciate you guys to subscribe to our channel, like the video. It'll help us come out with more content. Guys, everything we are about to learn today is applicable on any kind of market: stocks, cryptocurrency, anything. So, but today we are looking at a chart of Nifty on an hourly time frame. So, here each candle represents the price movement of Nifty on 1 hour, on one. So each candle shows the price movement of Nifty on an hourly basis. So if I zoom into it and look at this candle shows the open, the lowest point the candle got, the highest point, and the close of the candle. So why do we read candlesticks? So we read candlesticks to understand the psychology of the market, how the price is behaving, what are the important levels, the support and resistance. So this is an example of candlestick. So candlestick represents, as you all know, the price movement of an asset on a certain time frame. So if we are on a daily time frame, it shows the price movement of an asset on a daily time frame. It depends what time frame we are on. If we are on 1 hour time frame, it shows the movement of an asset on an hourly time frame. So let's assume we are on a 5 minute time frame. So each candlestick has a body and wicks. Each candlestick has two components, a body and a wick. So to understand candlesticks properly, we'll talk about the open, high, low, and close. So let's look at the example of this bullish candle, which is colored in green. So this candle's open is here and made a low of this. This wick is the lowest point this candle got to, and this is the highest point this candle got to on a 5 minute period, because we are assuming that we are on a 5 minute chart. So this is the highest point, and the candle came all the way down and closed here. So this is the point where the candle closed. So let me repeat. The candle opened here, made a lower wick, made a low of this, and shot up all the way till here, made a high, and came back and closed somewhere here. This is how a candle is formed. So it's the same when it comes to bearish candlestick. So here, the price opens higher, makes a high of this. This will be the high for the bearish candle. This will be the open, makes a high, falls all the way down, makes a low, creates a low wick, and closes somewhere here. This is a typical example of a bearish candlestick, completely opposite to the bullish candlestick. So in bullish, the price opens lower and closes higher. In bearish, the price opens higher and closes lower. Now I hope you guys have a good idea about how to read a single candlestick. So let's move on let's look at a few examples on the chart. So a quick recap, guys. So we are on Bank Nifty on a weekly time frame. We'll look at this candle. We'll understand the price movement of this candle. So as I said, we are on a weekly time frame. This candle opened lower somewhere here, made a lower wick here, shot up all the way to this point. This is the highest point where this candle got, created a upper wick and closed here. So I hope you guys are getting it. I hope it's pretty simple. So this represents a day where buyers were kind of in control because we opened lower and we closed higher. This represents a bullish candle and shows the power of bulls. So first we'll be talking about bullish candlestick pattern. These are the candlestick patterns which we'll be talking about. First is the normal bullish candle. Second is a hammer candlestick pattern. Third is bullish piercing, then bullish engulf and morning star. We'll talk about this candle, we'll talk about their psychology, and we'll even look at live examples of how the price reacts. So guys, talking about a normal bullish candle, this is how a normal bullish candle looks like. This is how a normal bullish candle looks like, where the open is at a lower point, creates a tiny wick on the lower side, shoots all the way up, creates a small wick on the upper side, and closes. This is how a typical bullish candle looks like. This candle simply shows the momentum of buyers. The psychology here is that the buyers are aggressively in control of the market and want to push the price higher. So thus there's a demand for buying. So this is how a bullish candle is formed. This is what the psychology is, where the selling pressure is very less and the buying pressure is very high, which creates a demand in the market and the price is pushed higher. So now we are looking at the second bullish candlestick pattern example, which is a hammer. So the psychology behind a hammer is that the price opened higher. The bears came into the picture, tried to push the price lower, and they were not successful. The bulls came back in, pushed the price all the way up, and closed somewhere here. The color of this candlestick pattern doesn't matter. It doesn't matter if it's a green or a red. A hammer can be of any color and it is a bullish candlestick pattern. A hammer is considered very significant when it's found at the bottom of a trend, when it's found at the support of a trend. So now let's look at the example of bullish piercing. So bullish piercing is a two candlestick chart pattern where the first candle is a normal bearish candle, which is followed by a bullish candle. An important rule here is that the bullish candle has to pierce the median of the bearish candle. This is a very important rule for this candlestick chart pattern, is that it has to pierce the median. Median is a middle region of a bearish candlestick where the bullish candle pierces through the median of this bearish candle. That's when a bullish piercing is formed. So the psychology behind this candle is that the bears were in control the entire time. For example, we are on an hourly time frame in Bank Nifty. For this 1 hour, the bears were in absolute control in pushing the price down, and they were successful. And after the close of this candle, the bulls got into action. The bulls got into action here and started pushing the price up, piercing the median of the previous bearish candle and closing above the median. A bullish piercing on a higher time frame can indicate a change in trend, as well as a bullish piercing helps you set stop losses, clear stop losses, and it even helps you in managing your trades. So now let's jump ahead to the fourth example, which is a bullish engulf. So a bullish engulf is a two candlestick chart pattern where, similar to bullish piercing, bullish engulf opens with a bearish candle, and a follow-up candle is a bullish candle which pierces, which engulfs the previous bearish candle, is known as bullish engulf. So here the bullish candle has to engulf the previous candle. Engulf meaning it has to eat up the complete candle. It has to close above the previous high of the candle. Previous open of the candle. So the bullish engulf candle has to close above the open of this previous candle. So in this case, the candle has closed above the open of this previous candle, so hence it is a bullish engulf. Bullish piercing and bullish engulf are kind of a similar candlestick chart pattern, but the only difference is in bullish engulf the entire bearish candle is engulfed, and in bullish piercing only the median of the bearish candle is taken out. The psychology of these candles remains the same. So the next bullish candlestick pattern which we're looking at is a morning star. So a morning star is a three candlestick pattern where the first candle is typically a bearish candle followed by a neutral candlestick. So we'll talk about neutral candlestick ahead in this course, and so the third candle will be a bullish candle. So here the neutral candle usually opens with a gap down and has a very neutral closing where the bulls and the bears were equally in control of the market and the closing is pretty neutral. And the third candle is usually slightly a gap up where the candle pierces through the median of this bearish candle and closes above the high of the second neutral candle. This is a typical example of morning star. So since we have spoken about all the bullish candlestick pattern, let's jump ahead and talk about the bearish candlestick pattern. We'll come back to this bullish candlestick pattern in a bit. We'll look at the examples and we'll look at how to trade these after talking about the bearish candlestick patterns. So guys, let's move ahead and talk about bearish candlestick patterns. So the first bearish candlestick pattern is of course a normal bearish candlestick pattern. So let's look at an example for a normal bearish candlestick pattern. So it's completely opposite of a bullish candlestick pattern where the price opens higher, creates a small wick on the upper side, which is usually a very small wick, where the buyers tried to push the price higher, where they were unsuccessful, and the price is pushed completely down to the lower end and creates a small wick on the lower side, and there's a strong bearish closing. This is a typical bearish candlestick pattern where the bears were always in control of the market, where they tried to push the market lower. This was the example of a bearish candlestick pattern. So the next example we are looking at is a inverted hammer. So this is how an inverted hammer looks like. Again, guys, the color of the candle doesn't matter. It's the price action that is created that matters. Here, the candle opened higher with a gap up, and the bears tried to push the price lower, which they were not successful, and the bulls took the price higher all the way up till here, which of course they couldn't hold it there, and the bears came into the picture and pushed the price all the way down here, and it closed somewhere here, making a pattern like this. So this is how an inverted hammer looks like. The psychology behind this pattern is, again, very simple. The bulls tried to push the price higher where they were not successful, and the bears came into the picture and pushed the price all the way down. So guys, next up we have bearish piercing. Bearish piercing is a two candlestick pattern where a normal bullish candle is followed up by a bearish candle which is pierced on the downside. So let's quickly look at the example. So this is how a bearish piercing looks like. The first candle is a normal bullish candle, and a second candle is followed up by a bearish candle where the median of this bullish candle is taken down and closed below the median of this bullish candle. This is how a bearish piercing looks like. The psychology again behind it is very simple. There was a pretty solid bullish run which is followed by the bears who tried to push the price lower and successfully close the price below the median of the bullish candle. The next example we are looking at is a bearish engulf. Let's go ahead and look at the example for a bearish engulf. So the bearish engulf is a two candlestick pattern where the first candle of course is a normal bullish candle, where the second candle is a bearish candle which completely engulfs the bullish candle. So this bearish candle completely covers the bullish candle. This is when it's called a bearish engulf. The psychology behind this candle is also pretty simple, where the bulls were in control for a long time and the bears suddenly come into the picture and completely take over the power and push the markets or the price down. So the last bearish example we are going to look at is an evening star. You guys must have guessed it correctly. Evening star is a complete opposite of a morning star. So let's look at the example. So this is a typical example of an evening star. The evening star is a three candlestick pattern where the first candle is a normal bullish candle followed by a neutral candle. A neutral candle is when the bulls and bears are equally in control and the price is closed in between. So the third candle will be a bearish candle, where the bearish candle completely takes over the low of the neutral candle and closes below. This is how a evening star is formed. This is an example of a evening star. So guys, I hope you guys understand the concept of candlestick, how a candlestick is formed, the psychology behind the formation of candlestick, what a candlestick is. So if you guys are thorough with it, let's move ahead and talk about how the price reacts when these candlesticks are formed on the charts. We'll look at live examples of how the market reacts to these candlestick formation. And if you guys don't understand anything, or if you guys have any questions, you can type in on the comment box and we will get back to you guys. So let's get started. So now we are looking at an example of bullish hammer on a chart of Bank Nifty on an hourly time frame. So here we find a bullish hammer which is found at a support. So how is this a support? This resistance broken turned into a support. So let's see how the price reacts. So guys, this is how the price has reacted to this bullish hammer. Bullish hammer is considered to be significant when it's found at a support. So this is how you trade a bullish hammer. This is how you identify a bullish hammer. Again, you can't just blindly trade based on one context. You need a system where you get other signals to trade the bullish hammer. This was just an example of how significant a bullish hammer is at a support. Now we are looking at an example of bullish engulf. This here is an example of bullish engulf. This red candle has been completely engulfed by this green candle. So this is a bullish engulf. So let's see how the price reacts here. So straight away the price just shot up. Again guys, you can't just trade this based on one thing. You need other indicators and you need to focus on price action. You need to focus on overall context of the chart and then take trades based on these candlestick chart patterns. They are really important, but it is also important to keep in mind that the other context of the chart is also more important. So here is a quick example of bullish piercing. Let's not waste much time. Let's quickly go ahead and see how the price reacts to this bullish piercing right here. This candle right here is a bullish piercing. Let's just this is how the prices react to this bullish piercing. As you can see guys, all the chart patterns, candlestick chart patterns which you guys have learned is only significant if there is a context, if there's a price action build-up, if there's a system in place. Don't just blindly trade these chart patterns. This is not going to help you. Now let's look at an example for morning star. So is this a morning star? How do we know if this is a morning star? So for morning star, the bullish candle has to close above the neutral candle. The close of the bullish candle has to be above the neutral candle. So let's see how the price reacts here. this is how the price has reacted, right, guys? It has just taken off from that area. It was kind of like a consolidation phase where there was a previous resistance as well. This is how you build your price action. This is how you understand the charts. This is how you understand the candlestick. Candlesticks have a very high importance when they're found at these levels, when there is a context behind the chart, when there's a story behind the price action. So, a quick recap of what we learned in this video, guys. We started off with candlesticks. We learned about the candles, the high, the low, the close, the median, the body, and we learned about bullish and bearish candles. We saw a few examples of bullish and bearish candles. We even learned about the psychology of these candles, how to trade them. We saw a few examples of how these candles react on the chart. And again, guys, you can't just trade based on these candlestick patterns. You need a context, you need a price action, you need a system. You need to understand the price action to trade these chart patterns. So I'll definitely come up with another video on chart pattern, on candlestick chart patterns, where you can trade, you can actually trade these. There are a few set of rules which we can follow and successfully trade these candlestick chart patterns. So that's all for today, guys. In this video, I'll surely come up with another video which will be a part 2 of this candlestick chart pattern. So do like the video, do share it among your friends, and do subscribe to our channel. Thank you.